Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. If you have not watched the last video, go and watch that first before you watch this one here, because you will see what the plan is. The plan is to hopefully get you guys to understand how you can start a fresh portfolio, or if you've already started, some of the things that you could do. Now in the last video we talked about all the stock side of things, so picking individual stocks, and in today's video this is three parts. Okay, so we've got the video for the stocks already done, so we'll go and watch that one first. And we said about 60% of the portfolio will be just individual stocks, and now we're going to look at the 40%, and the 40% we said it could be ETFs. So in total I've got 13 different ETFs that we want to talk about. Today's part 2, and we have part 3 coming up as well. So in today's video we're going to talk about basically some of the ETFs that I know that are out there for Sharia compliant investing individuals. Okay, so we're going to look at the ETFs. I'm going to give you details like things like the name of the ticker, where you can buy it, and so on, the expense ratio, the performance up to basically year to date, as well as some of the individual stocks that are in there. Bear in mind, when you look at the ETFs, and we're looking from Sharia compliance side of things, they basically use it as a one instrument or one stock. So there might be some companies in there that are questionable, some companies that might not Sharia compliant because of the debt levels, not because of the business side of things. So just bear in mind, they're looking at it as a one individual stock rather than individual, and ETFs rather than individual stocks. Okay, right, as you can see here, this is my portfolio. If you have not seen my portfolio before, go and watch the portfolio update and that I've done recently, where I talked about every single individual and what I'm going to do moving forward, inshallah, where I valued every single stock that I have in this portfolio. Now if you haven't joined us on Discord, on the Discord yet, please do that. That helps the channel, that helps me and grow this channel, of course encourages me to carry on, inshallah, as well as of course making sure that you like the videos. Okay, right, so let's get started with the first one we're looking at is the iShares USA Islamic ETF, or ISUS. Okay, this is the first ETF we're going to look at. This comes from iShares. iShares is owned by BlackRock. BlackRock is one of the biggest asset managers companies out there in the world. It has expense ratio of 0.3. Now this expense ratio used to be, I think, 0.5, and I think it has come down quite a bit, which is quite nice. So now it's more or less the same as what the basically other companies offer. A year to date, this ETF has a total return, a return of 17%, which is quite nice. But remember, the S&P 500 right now is returning I think 21%, 22%. So this is not bad. So it's about 5% less than where the S&P 500 is. And again, when you look at this ETF, you can see the top 10 are Microsoft, Tesla, and ExxonMobil, Johnson Johnson, Procter & Gamble, Chevron, Adobe, Salesforce, Advanced Micro Devices, as well as Cisco. This makes up 56% of this ETF. So the top 10 companies are worth 56%. Okay, 56% of this entire portfolio, entire ETF. The rest of them have the rest of that 100%. Now this is very well concentrated, because when you look at the actual ETF, so let me zoom out a bit. Okay, what you will see is 25% in terms of weightings just Microsoft, about 7% on Tesla, then the rest of the company, so 3-4% for Exxon, J&J, Procter & Gamble. You could see the rest are well diversified. Now I think this is a lot to do with the fact that Microsoft has gone up since last quarter, last rebalance, if you like. So when they rebalance it again, they probably will sell some Microsoft and buy and rebalance the whole portfolio, because that's what they normally do. So they're not buying and selling every single week, so they rebalance it once a quarter, I think, and they will definitely have to rebalance this, because this has gone up so much now, because since the last rebalancing it's gone up so much. That's my take on it anyway. So you could see that's the 10 companies the top 10 companies if you like. There's a lot more information. You can buy in the UK and so on. So if you are interested, just go to their iShares website and just put the ticket, and you learn more about the performance. You learn more about the fund itself and the fact that it has expense ratio of this much. It does pay a dividend, so annual, so it pays twice a year, May and I think May and November, every single year. So there's a bit more information you can find out about this. Okay, so the next one that we're looking at today is an ISWD, which is the iShares Islamic World Islamic ETF, sorry, an expense ratio of same thing. And guess what? It has total return of 13%, which is not bad at all. But look at this. It's exactly the same as what you have here. So these two ETFs, although they come from different companies, and one is for the United States of America and the other one is for the world, which means it should be a little bit more diversified if you think about it. But the top 10 companies, the top 9 is exactly the same. So basically from Microsoft to Tesla to Exxon to J&J, Procter & Gamble, Chevron, Adobe, Salesforce, and Advanced Micro Devices. The only difference is one has a Cisco Systems in the 10th place, and the other one has a basically Shell. And again, if you go to this ETF and go to their website, you'll see about 17% is Microsoft, again 5% Tesla, and so on. The rest of them are kind of much basically balanced slightly. So again, probably similar situation going on with the first one. So I'm assuming that's not going to change anytime soon. So again, so 13% is not bad, but it could be better. Right, the next one is the emerging markets one, is 7% up. The expense ratio is slightly higher, 0.35, and it has companies that like Taiwan Semis, Samsung, for example, Reliance, SK Hynix. I don't know this company at all. There is a few companies that I have not come across. I think is the Rio Tinto of Brazil, I think it was, and Al Rajhi is the Saudi Arabian bank, and then Samsung. There's two different classes of Samsung. So this is, I think this is non-voting, this is voting. One of them is anyway, meaning basically you can't vote for the companies. This one and this one is exactly the same. Again, more or less the same thing. One is voting, one is non-voting, and then this Chinese company. Again, so yeah, so it's decent. But however, it's only 7% return when the total market has returned this year for the S&P 500, that is about over 21%, and 56% comes basically from this top 10. And as you can see here, about 20% comes from, so if I go to holdings again, 20% of this is actually just Taiwan Semi, and then Samsung, and then so on. So the top two again are doing basically almost the 30%, just the top two. And then you've got, so I don't like when ETFs are like this. For example, the other two were almost similar. So I'm hoping when they do rebalance, they get rid of this 20%. That's too much. What happens if if the war starts today between Taiwan and China? What happens? This is going to tank, so you're going to lose about 20% of that ETFs. That's crazy. I will never do that. But yeah, so that's the third ETF that we're looking at today. The next one is one that I have spoken about not long ago, and in terms of a lot of brothers were talking about it recently in the Patreon account, not Patreon, Discord. And as you can see here, we've got 40% and 0.4% of expense ratio, 28% total return this year, which is absolutely amazing. If I show you the S&P 500, actually, VO, if we use VO or SPY or whatever, you can see a year to date, it's about 23%. Let's call it even 24% because it's gone up the last couple of days. So the Vanguard 500 index fund, which is basically VO, is basically the one that tracks the S&P 500. Okay, so there are SPY and others that track as well. But yeah, so that's the one. And if we look at now 28% in comparison to this here, 24% is actually beating the market. It's got Apple, it's got Microsoft, it's got Amazon, Nvidia, Alphabet, Meta, Tesla, Alphabet Class C, got Broadcom and Eli Lilly. These companies have ripped the market apart this year, especially Nvidia is up almost to like 270%. Microsoft is up a lot. Tesla is up, and as well as Broadcom and Eli Lilly. They've done absolutely amazing, and for that reason I think that helped a lot this ETF this year. And as you can see here, out of the 3 that we just looked at so far, and the 4 is actually this is the most expensive one, but only 27%. So that's not really bad. 27% comes from the top 10, and the rest of them are kind of scattered around. So if we look at it again, okay, these are the basically top 10 companies, and if you want to know a bit more about it, all the other companies, you can just download that and then look at the overall. But again, it's not well diversified. It's basically 75% is the US, and then 4%, 5% are from Japan, Switzerland, United Kingdom. So it's not really bad, but it could have been better. Now you've got other information like ESGs, and you've got the information technology, the breakdown of the sectors if you like. So heavy on information technology, healthcare, basically more or less similar to what you see in the S&P 500. So I think that's what they're trying to do here anyway. Right, the next one is Halal. This is another ETF that we've talked about before. It has expense ratio of 0.5. A year to date is up 29%, which is actually quite nice. Again, it has Apple, Microsoft, Alphabet, Tesla. Okay, it has Tesla, Meta, and Alphabet. You've got Exxon, you've got Eli Lilly, you've got J&J, Procter & Gamble. So all of the same, more or less, as the this one here. So Invesco and Halal have more or less similar sort of companies, but this one has Broadcom and Eli Lilly. This one has Eli Lilly there, but it doesn't have a Broadcom. So the only major difference between the two really is, and especially a big one, is Nvidia, but it's still actually beating, despite having this one has got Nvidia, but this one actually is slightly ahead, but 50% concentrated. So the top 10 actually make up 50% of that ETF. And as you can see here, the top 10 is actually 50%, and then you can see the breakdown about 14%, and then 3%. Again, top heavy. Apple and Microsoft again are being taken over the entire thing, and then the rest of them are got like about 3%, 4%, and so on. And as you can see here, technology is the biggest one there, electronic technology. So this one, healthcare, energy, and so on. So there is quite well diversified ETFs, but similar sort of basically what is going on with the S&P 500. So it more or less tracks the S&P, especially the top 10. If you look at the S&P top basically 500, and you look at the top 10 companies, basically the way they are weighted is based on their market cap, and these are the biggest companies if you check it. Right, so the next one that we're looking at today is Ummah, which is again owned by an Wahid, Dow Jones Islamic ETF, more or less exactly the same as what we've seen in the last couple of years. It has Taiwan Semis, Novo Nordisk, we've got Infineon Technology, Samsung, you've got ASML, you've got Shopify, and you've got Novartis, you've got Tencent, Roche. I like this because if you think this is French company, I think that's French, yeah, that's French company, that's Dutch, not Dutch, Swiss company, that's the Chinese company there. This is Novartis, I think it might be French if I might be wrong. Shopify, Canadian, ASML, and basically the Dutch. Samsung, again, basically looking the Korea side of things. I'm not sure where this company is from. Actually, let me have a quick look. Okay, so it's Germany's largest semiconductor. The company was, okay, that's interesting. So I didn't know that Infineon is actually is a German company, semiconductor company. That's interesting. Might be worth looking into it. So again, they are all from different countries. So this is Dutch company, and then Taiwan Semiconductor there. So they are different, the biggest companies from different countries, if you like. So each one of these is the biggest company in their own countries, and they kind of put them together. That's interesting. All right, let's find out. All right, so the next one is SPUS. We've talked about this before. 0.49 expense ratio, 33% up. By the way, this one is up about 15%, which is quite decent, and 38% comes from the top 10. And this one, 33% up, which is absolutely huge, and 50% of the basically of this entire thing is basically comes from the top 10. Again, similar to these two here, you can see you got your Apples, your Microsoft, your Nvidias, the Alphabet, Teslas, and Metas, and Alphabet, Eli Lilly's, the Broadcom, and J&J. So these two actually mirror each other. Okay, so this basically I think a lot of it is because they tracked similar sort of the underlying index they track is basically the same sometimes, and because of that they more or less track the same. And as you can see though, this one has only 27% coming from the top 10, whereas this one has 50% of that is coming from actually the top 10 companies. But the fact is actually outperformed all of the other ETFs for this year. That's interesting. The only thing I know about this one is you can't buy Halal and I think you can buy through an ISA account through Trading 212, but with this one you can't buy. Actually, so far all of this you can buy through Trading 212 ISA account. This one you can't. Okay, I think this one you might be able to buy. I think I can't remember correctly. Correct me if I'm wrong, but I think you can buy Interactive Brokers UK version, the ISA account. I think you can find it. I'm not sure if you can trade it yet, but there you go. And as you can see here, 50% comes from the top 10, and then the rest. Okay, you can see the biggest holdings, that 13%, 12%, and then more or less 5%, 3%, and so on. So yeah, more or less similar to what we've seen so far. The top two basically dominate, and then the rest is about 5%, 4%. And as you can see, the different sectors, technology is always the top if you think about it. Right, so one more, and then we're done with today's video. And that one is the SPRE, which is basically a REIT, 0.69, the most expensive one that we've seen so far, only up 4%. I'm actually surprised it's up 4% because the REITs are down a lot this year. Top 10 Prologis, Crowdcastle, Public Storage, and so on. So you've got the top 10 make up 76%, but I believe there's only 17, 18 stocks in there. There's not that many. So let's quickly check using this website here and see how many stocks are in there. But not a lot. I think if I remember correctly from last time I checked, okay, if I click holdings, 76%, 23% there, and you can see again, oh, this one, okay, 13%, almost 13%, 12%, 11%, and then so on. So let's have a look. Is there anything else that we can find? All right, let's go back to the overview. I want to see how many holdings are in. In fact, let's go back to here. It doesn't tell us how many holdings are in there. Price, earnings, okay, weighted. It has 4.24% dividend yield. There we go, 35 holdings in there. And United States, of course, is the biggest. And then, but that's huge. It's got the fact that it's got 4% dividend yield. There you go. So that's only up for 4%. 76% is actually where it comes from. Now that's basically, and what I would do if I were you and you're looking for an ETF right now. Now you've got a bit of an overview. You can go to their websites and learn more about the ETF, the expense ratio, and so on. But ETFs, the beauty about it is if there's like, for example, these, especially the top three, whatever, there's 200 plus holdings in there. You can't go wrong. If you're a new investor and you're looking for basically an ETF to start investing in the stock market, and you still want to learn how to pick stocks, I would definitely say to you guys, this is what I would do. Learn more about ETFs and invest in ETFs. Maybe pick 2 or 3 from here and just the dollar up cost average every single month, whether the market is up or down. Of course, some months it might be down, some months might be up. This year we've had a very good year where the market is up 23%. So for that reason, some of these ETFs would have done really well. If we had looked at, I'm sure we looked at this before, about a year ago, this will probably be a different game. 2022, these ETFs I'm sure didn't do well because overall market didn't do well, especially technology companies. So this year, of course, we have an up year. Next year might be a down year, but what you need to do is do your little bit of research and then think about the long-term process, and don't worry about what happens to the prices of every single day, blah blah blah. Okay, right, now we've done this, we have this is 7 different ETFs that we wanted to check today. Is it 7 or 8 in here? Okay, we've got 5 more. So like I said to you guys before, we've got 13 ETFs. So the 40% is basically you can divide it between these ETFs, and the plus the next video where I will be sharing with you 5 more ETFs, Sharia compliant ETF, that you could potentially buy, and you can buy them in the UK. I'm not sure other countries, but I will let you know inshallah in that video. Right, I'm gonna end the video here. Have a wonderful day. If you like this type of content, please like the video, subscribe to the channel. It takes a lot of time to prepare these videos. I would really appreciate if you can join us on the Patreon account. If you can like the video, subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.